Good morning, everyone, and welcome to the European crossover. We're running a couple of minutes late. Got to get out some wise trade alerts. So sorry about that. So I put this post-it note here because there will not be a show on Monday. Uh, Blake is taking Monday off, so he's taking Monday off. So I'm going to be covering the morning edge, and I used to do that before. Is do this show and then do the morning edge, and that's just simply too much for me. I just can't do 3 straight hours. I mean, even though I'm taking a break, man, it's just too much. So whenever I cover for Blake, I just let him know I'm not going to do the European crossover. That way I can just do his show. It's 2 hours. 2 hours is right there. I can do 2 hours, but I can't do 3 hours straight. I don't know how he does it. I mean, he does 2 hours and he comes back for the lunch money webinar, and no way. I can't do that. But let's go and take a look at so scoot this right. And nothing's really moved too much in FX. I mean, Euro after we had that, after the initial meeting, and there's a good area to go and short up against there. I shared this. I thought that was freaking crazy. I couldn't even believe it. This is just freaking amazing. I can't even get over it. I thought Goldman Sachs was bad. I really did. I thought Goldman Sachs was bad. Citi reestablishes long on the euro yesterday at 1374, and they get their rear end whacked. I mean, technically, they're still in the trade, but I mean, talk about buying the freaking high. Actually, on the inside call, I even tweeted out there was a chance because of idiots like this. I said, there's a chance we can get up there and we can fail in that little zone there. We've talked about that 14, 13, 29. I said, that's going to be very favorable. Because of idiots like this that would think, and I really didn't think of idiots like this. What I was thinking was the market would try and gun some stops and spook it and get above 14, and then we would fail. I put in there is quite favorable between 14.13 to 14.29. But these guys going and buy 1374, and it says your dollar is threatening to post a bullish outside day if it closes above 1387, as it did on the day of the last ECB. And Bund yields look like they're going to surge higher. We're going long, or they're saying, going long at 1374 with a stop loss of 1140. Well, I told Blake I'm looking for this market to move to around 1192-ish, so maybe they may be able to stay in the trade. But oh my God, that was really pretty stupid. Really was. Anyway, we see the dollar yen spooking up higher. You know that we were looking, although albeit for different reasons. I'm looking for a move potentially. I think it's to 1170. I told y'all. We'll look at it. It says we'll go over this real quickly because I got up late. Just a moment. Okay, it says yen sinks on Bank of Japan stimulus expansion. I haven't even read the report. That's why I'm just going to go through real quick. And it is a big mover because everybody's been expecting the dollar yen to go lower. Um, the yen skidded by 1% to hit a 2.5-week low against the dollar on Friday after reports that the BOJ was considering helping banks by applying negative rates to its lending program for financial institutions. The BOJ may consider the next step if policymakers decide to lower further the negative 0.1% interest rate applied by some bank reserves, talked with the central bank. Bloomberg report on its site. The yen often used as a safe haven at times of market turbulence has gained ground around 10% against the dollar since the end of January, even though the BOJ added negative rates to its stimulus program in February. But it weakened 1.2% on Friday to 10.76 after the report, leaving it headed for its worst week in 12 with almost a 2% fall. The BOJ's next policy review ends on April 28th. We're seeing some lightening of speculative long yen positions ahead of next week, and that's been encouraged by these reports that the BOJ is considering additional reason, said Bank of Japan Mitsubishi currency economist Lee Hardman. He's fueling expectations that the BOJ is going to act more aggressively next week. In a separate official BOJ semi-annual report of Japan's financial system, the central bank said its negative interest rate policy will weigh on financial institutions' profits for the time being, though they have the strength to continue taking on risk. The yen also fell over 1% against Europe's single currency to 24.93. That's the euro yen. Against the dollar, the euro fell 0.2% to a week low of 12.65 euro, with traders citing a worse than expected German purchasing managers index surveyed for weakness. Okay, the single currency has gone as high as 13.99 on Thursday during the European ECB Bank News Conference. ECB doggies said the central bank's policy of printing money and keeping borrowing costs at rock bottom was working, adding that interest rates would stay at current record lows for a long time. He actually said could stay at current record lows or lower. And remember how he reversed himself as after Idiot Pizza Boy basically gave the market the green light to go along the euro when he said, I guess the reporter asked him and he says, no, they won't be going any lower. So now this time he says, yes, it will be low. It will stay as low or lower. So anyway. So let's see what's on the calendar. I don't know what they're referring to with this German PMI, because it came in line. Well, you know what? And they're saying weaker than expected. It came in better than expected, and they're saying it's weaker than expected. So I don't even get that right there. Against the dollar, the euro fell 0.2% to a one-week low of 12.65, with traders citing a worse than expected German purchasing managers index survey for weakness. Well, the flash. The actual was 51.90. The poll was for 51. They came in way better, so I don't know what they're talking about. So let's go into the U.S. session. Is there anything here? We've got Canadian inflation data, retail sales, market PMI flash at 9:45 Eastern. And that's it. So let's just go on and move into the charts. So the big mover of the night, morning, whatever you want to call it, is dollar yen. So let's take a look at the dollar yen. Well, you see on the cable, we held the cable here. I tweeted out that chart and I discussed it with Blake. I said, we get that good resistance. Wasn't looking for it to go pop. And the risk, we talked about that before, was 44.65. Let's check at dollar yen. So there's my target. It's 11.77. And we're well on our way. So we're doing pretty good. This is when I just started discussing it right here. I thought we were going to move out. Now my reason actually is kind of funny because now it's moving, and now it's moving when my whole premise for it to move higher was as the SPOOs got up towards 2014 and 3/4, that was forced the dollar yen to go higher. I mean, 21.14, I mean to say. And then we got to my target for the day, which was 21.04 1/4 in the SPOOs, and the high was 21.05 1/4. So that's pretty bad of me. I missed the high by one handle. And then my low was 20.77.5. I believe that's what I'd marked when I got bearish. And doggone it, I missed the low. I missed the low now by 1/4 of a handle. I mean, does anybody call the SPOOs better than me? Seriously, I'm not even joking. I mean, if it is what it is. So my whole thought about 11.77 was predicated on the idea that SPOOs, if they got up to 21.14.75, the dollar yen wouldn't be able to fight it anymore. It would just blow doors and hit stops. Well, we have hit stops, but this was because of the BOJ, potentially. But the reason I came up with this is because if you take this range, you see that? Yeah. Right there. You see how it's been trading in this range? I probably should just go, it'd probably be easier. If I just go and line this up, it'll be, visually it'll be easier. So let's do that. So this is my thought. When I looked at it, we were trading in this range, essentially. So my thought was the dollar yen's going to break out of this range. And when you add that extension of that range, that took us right up there to 1177. And we're making a pretty good run for it. 1103, I do expect some pushback against this 1103 a little bit, but ultimately, I think we're going to make it up to 1177. Now, 1146 is the 61% of this low, 765 right in here. Could be a 64 if you look at it, but Mox Nix. Of this move to right up here, which is 1381. And we'll do that. See that? 61%. So I think this is where the market, let's put it this way, I think this is where the market wants to go to. You know, you're never going to know what the actual high or the low is. I mean, like my S&Ps, I mean, I think we're going to go to 2057. We may overshoot that down to 2052. And I said stop offs at 20, I think it said 2077 and a half. Yeah, 2077 and a half, 2062 and a half. I'd have to check my, I mean, I tweeted it out there for everybody. Let me see. Take a look. Yeah, 2078. And the low is 2077 and a half. Yeah, I looked at my thing just to make sure. And I tweeted it out to everybody. So I tweeted an inside call, but I tweeted it out. And it says, ES, I'm looking for a test. I said this yesterday. I mean, I got bearish. Not yesterday, but I got bearish the day before that. After we got to 2104 because of the stupid run up in crude. But yesterday morning, very early, I tweeted out, ES, I am looking for, after tweeting out a chart, I said, I'm looking for a test of 2057 with stopping points at 2078 and 2062. And the low in the session last night was 2077 and a half. Okay, let's see. So, I think we're going up to here. I think we're going to make it up in here, in this area. We'll see what happens unless it runs out of gas before, which sounds kind of funny. Unless it runs out of gas, I think we'll make it up. But I think that's where the market wants to go to because I think you'll hit enough stops or goose enough people. And this is a good area, I believe, to go on and come in at 1177. I think it'd be a good area if you're probably not a whole lot of people playing for the long side, but I would be looking to exit right in between 1146 and 1177. Maybe they'll get a little bit more carried away and punch it up even higher. I don't know, but I'm saying that's where. Well, let's put it to you this way: if you want to get short, I really wouldn't be getting short until we got to at least 11. But I would look for the market to potentially run out of gas right in here between 1146. I'm going to go with 1177. This is what I think. Remember, I wanted to get long on this sucker at 684. I thought we'd make one more dip down there. I thought this was going to be an awesome area. And it just came up short. What can you do? Adam says, can you take a look at dollar CAD if you have some time? Yeah, sure, we'll take a look at dollar CAD. So, good stuff on the dollar yen. You know, we've been trading this pretty good on this cable. And I have to say, maybe y'all have. I'm just being honest with you. I already said, Blake was chiding me about that too. I don't trade the cable. And you know, on Friday I was saying it's a buy. I don't like that currency. I don't like it. But I did go in there with Blake and told him, hey, look, I just tweeted out a chart. 44.57 is a level. 44.88 is 78%. We have this downtrend line. I really felt we talked about this. And I thought we'd punch him up in here. Because that made, remember we were looking about getting, not long, but I said that they're going to probably come down to 43.10-ish, and the low is 42.99, and that opened the door for us to rally them up here. But I said they're going to run out of gas. Because they were able to take out this high, but I figured they're going to run out of gas. The risk was still up to China up here, but I figured they would run out of gas, which they did. So let's go and take a look at the dollar CAD. I still think the crude's going to go and pull back. Clean this up. So, yeah, it looks like we've got a nice little bottom in here. Like I said, I don't really pay too much attention to dollar CAD. I mean, I used to trade it as a proxy against crude, a proxy for crude, and I was like, what the hell are you doing that for? Just trade the crude. Because it would get frustrating to me sometimes the crude make a move, and I'd be like, why is the dollar CAD reacting? So, but we're back up here to this 27.50. You can see where they slapped it down because that was previously support, now it's resistance. Not a whole lot, but they pulled it back, 25 pips. And you can see they ran up there, and then we pulled back. Make another run up here. But like I said, we talked about this. I'm not going to go back over these levels from way back when. But we talked about this whole area. Said, hey, look, you can, if you're short, you should look to cover as we go past 27 because we've got this 26.74 in this hole. That's what I put in green was it's even more solid support within a pretty good area already. So you can see how the market, you got a lot of trade in this area. Now we did overshoot it. I wasn't paying attention to it, but you can see this 26.12. This is from way, 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 way back when. If someone got an opportunity to buy 26.12, oh my God, you just had to take that. That was awesome because you can see how thick this is. This was already a good area, and then on top of this, and we went with this outlier, and they goosed some stops. Oh my God! Whoever bought 26.12, it's just like freaking. I have not even touched this chart. You can see I didn't even update it. This 20, all these levels are from way, way, way back when the market was trading at that area, and it just goes to show you what I always tell people: the market goes to levels. Has nothing to do with oscillators. Okay, I mean, a lot of times I'm always making fun of monkey patterns, which call harmonics. But there's nothing worse than oscillators, and I don't care who likes using oscillators. I don't care. I really don't care. You look at crude oil and what crude oil's done in the last few days. It's overbought. It's slightly overbought. It's insanely overbought. It's crazy overbought. You see what I'm saying? Oscillators are useless. The market respects levels. And I've had these levels in since way, 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 way back when. You can see here. We went down here, and this was a great turnaround. But you can see that's why I had this marked in green already on a green level, which meant there was a whole lot more volume. And you can see we did just that. We saw a lot of good trading and holding here in this level. And then we got this outlier, and we came back, and the market's been able to grab yourself some decent jab, on the dollar CAD just by going with this chart and going with these levels. I'm saying where this, not my chart per se, but I'm saying the levels. The levels are the levels. You trade it however you want. Like I told people yesterday, the only technical indicator I use, if you want to call it an indicator, is exponential moving averages. That's the only thing I use. I use nothing else, with the exception of Fibonacci. And Fibonacci is not really, I say, a technical indicator. It's just where the market's going to, the extent that it can potentially push to or not push to. And I use that in conjunction. I don't even use my exponential moving average that much to my detriment, but As I was saying, is these markets always respect the levels. So that's the take on the dollar CAD. It's almost time for the break. So you can see here that the euro has come into the support here, 12.57. See it right here, which is bigger here on 12.55. I told Blake yesterday, I do think we're going to get down here to this 11.92-ish. There it is. So we're going to go and take a break. And as I mentioned, no European crossover on Monday because I'm covering for Blake. So just posting that so that everybody can see that clearly. And we're coming to some very good support here at 12.55. You see that right here, the top of this zone, which is 11.51 to 12.55. We talked about this area here. Remember I said if it fails, I would look for some good short covering at 12.14, this area. I think ultimately this is where I think the market will go to ultimately. So hang on, let me move this out of the way because I know if it's going to cover up that, and I won't have that shit we're looking for. This is where ultimately I think the market will go to before it finally settles itself down in this area. And you see there's that 11.92 that I mentioned yesterday. But this is going to be a nice stopping point, this 12.55 you see here. But we're going to go in and take a break. Okay, everybody, welcome back to the crossover. As I put this down here, because like I said, there will not be a European crossover on Monday. I'm going to be covering for Blake because he's going to be off on Monday, and I don't do 3-hour shows anymore. It's just too taxing. So move this out of the way. Oh, come on, I forgot to do that. Device trigger. Hang on 1 second. So we saw with Euro and I talked to Blake, came on there, and I thought that this was a good area right in here for the Euro. I tweeted out an inside call, I go, being up here, it opens a door that potentially we could have come into this zone. And I said that was a very favorable area in here, if it did. Because I thought they may try and, the market, as it got up here, I thought it might try and get a little giddy and punch some stops and spook some people. Because I didn't think nobody's stupid enough to fall for this one, are they? And I said, if they make that run up here, this is going to be very favorable. And they made it up to 13.99, and they fell apart. But as I showed y'all earlier, CityFX, for their institutional clients, bought the market at 13.74. Basically, almost bought the top. They're still in the trade, but they're in a world of hurt on this one. Now, as I just tweeted out, I just pointed out, we do have some support here at 12.55. But I think, as I mentioned to Blake on there, I think we're going to 11.92. And I think this is the area where ultimately the market will go to. maybe we make it to 51, but I think this is where it will run out of gas. We'll see a rally, and then maybe we'll come back down and test that here. I don't know what the euro's going to do after that. That's what I'm saying is I don't try and, I always say that all the time. I don't put my flag in the ground and say it's going to go here, it's going to go there, in the sense that I say this is based on the price action that we have here and the way, and I say that we should be saying like the price structure and the way that the markets worked really hard up here, and we came down here, and now we came back into this area and we failed. That opens or expands the range to me. And I think that the range, we could always come below, go towards 11. But I think that initially that opens the range to right in this area. Now we know the 1214 is 78%, which would take this out. So that's what I'm looking for, it to run out of gas towards 11.92. Can we overshoot? Yeah, we can overshoot a little bit. And then I think from there the market will pump back up, maybe to 1236, and then we'll come down here and we'll see what happens. But I just go with however the market's trading at that point. Yeah. And I'm just trying to get out of wise trade alert, so I apologize. So that's what we have here in the euro. We're finally starting to back off on this Aussie. This thing has been incredible. And look how we come back down. Remember, I was telling people, hey, look, don't try and rush this thing. Here's where you want to come in short there, because you have 78.20, 77.89 at your back. And we were able to punch through that, and then we came back down to 77.66. Then we were able to go higher. We came back down again to 77.66. And then you can see here we had a gravestone Joji right here. Market pull back. We take it one more last hurrah on the backdrop of the ECB, and then finally we break them lower. And now we're here. So if you'd been patient, even if you were down, and then thinking, oh my God, this is crazy. How can they maintain you? Obviously they kept your feet to the fire for a pretty good long time, and I thought it's like way overdone. But at least you weren't that bad in the negative. Where for those that came in early, man, they were in a world of freaking hurt. They probably even got stopped out, maybe. But you can see here, if you'd been patient, you were finally in the black. So we'll see what happens there. Gold's made a pretty nice run. I got to give it props in the sense they got above 1263. A lot of this, like I said, Blake was mentioning about the silver. I just don't even pay attention to the silver. I just don't. Yeah, and I know that it's being supported because of silver. So that's what I'm saying is, I'm cognizant of that, but it's not something I really hang my hat on. You can look on this, it almost looks like a little mini head and shoulders in here, but it's way up here, this shot up here, or shoot up here, I should say. But if we come back up here, I guess this 57 is going to be pretty good. Look at this. Looks like a nice head and shoulders. I don't know why I had this on 4 hour. Doggone. I guess I was looking way back. Because you don't only look at 2 hours. So now you look at it and like, whoa, that looks like a freaking head and shoulders. So we'll take a look at this. Doggone it. You see many programs, I forget how I even do this. What the heck? What the hell's going on here? There we go. They use Ninja Trader, they use TD Ameritrade, and and Sear charts. Sometimes I forget which one's which. Oh, that would augur for a move down to 1620. So that's in the gold. It's 549. Okay, I guess we can take a look. Someone's asking about the crude. I don't know if we can even save that stupid headline. Okay. Sorry about that. I was trying to post Wise Trade Alert, so getting get a little sidetracked. Sam says, "Hey Paul, the city's traders didn't put the position on, but told their clients to go long. Tells you a lot about the bank's research guys. They're horrible. They're absolutely horrible, and I don't mean that. I mean, they're crappy traders. If you want to follow a bank research firm, I read a lot of research. You know who's the best in the biz? And I'm telling you, these people, these guys and girls, knock the S out of the frickin' park. That's frickin' Morgan Stanley. Those dudes and gals are the are the best on the planet. Oh my God, they are awesome. If you're going to pay for any bank research, excuse my language, you got to go with Morgan Stanley. They are the bomb when it comes to the FX research. Those guys are they're unbelievable. The worst, Goldman Sachs, and obviously CityFX taking Goldman Sachs for a run on its money. The only way that Goldman ever got a name for itself is because, a few years ago, is that when the euro was running and flying high, basically they just bullied the market. So when they said buy it and the euro was already predisposed in that direction, it would run the market up. It looked like these guys really knew their stuff. I mean, they did make some good calls, but they've been horrible for a long time, Goldman Sachs. And now obviously CityFX looks like they're trying to make a run for their money too. I mean, that's just plain stupid. And it's not even for retail traders. That's for institutional clients. I mean, it's pretty crappy. So here we are in crude oil. I guess to get a better look at kind of rejiggered these charts around. Let's take a look at the 2-hour chart first. So here we are in the crude oil. What the heck? I'm over here looking at the spooks. Holy smokes. Look at this crazy run. But I pointed this out a couple of days ago. We got this gravestone doji right here. You can see where the market fell apart. Coming to this 43.11 here. Probably going to be key is right here in this area, 42.75, 42.89. Someone was asking me yesterday about it, and I said, I just think we're going to do some back and fill. I told them, I go, directional calls are not my bailiwick. And it's not even that, it's my bailiwick. It's just that if there's a market that you don't want to make directional calls on, obviously it looks like an idiot saying this, it's crude because it gives and goes back and forth, although that's how I make my money. I already said that many times to y'all. I've said, if a market's going one direction, I'm not going to make very much money on it. Because how can I say I'm going to make it, oh, I'm killing it, when I trade the back and forth. And if you got a market going in one direction, I'm not making money because I already said I don't hold. So you can see this monster going this way. And, like I said, I shared that out. Thursday was my best day ever trading crude oil. And then I gave a big chunk of it back on Monday and Tuesday. And actually, I started out Monday very well. I don't even trade crude in Europe. And I was trading crude in Europe. And then in the New York session. And then I was still looking for buy stops to be hit in the New York session. It wasn't until after those buy stops got hit that I said, okay, now I think the market ran out of gas. And I'll be doggone. It kept going higher. It came back to my area, and I was in the black. And I thought, oh, no, they're going to go lower. And then I hung on overnight, which was pretty stupid. And then I just got, hit in the face even more. But like I said, if you're patient enough, markets will come back. And yesterday, it started reverting back to the way it was, a little bit more, not so wacko. But we've come in this 43.11. I mentioned yesterday the 43.56. We saw a footprint there. The market held for a while. We even rallied like 25 cents on a good footprint. Then we went lower. And then on the 30-minute, I think it had like 43.46. And then they held again. And then we made the run down to, I think on the 30 minutes, 43.09. So all this area is good. It's a Friday, so a lot of people got their rear ends dusted. I got my rear end dusted on Monday and Tuesday. So they're probably, you have to look at it this way, no one's probably trying to challenge the market on a Friday. So if you're doing anything, you're probably going to day trade it, like that. IB says, what have you found to be the most reliable time frame or range on the footprint? Because I thought he was going to see on the charts. I was like, dude, are you seriously kidding? I used 2 hour 30 minutes. No, he's asking for the footprint. That's an excellent question. And sometimes I'll change it up. So we'll go into the footprint. Excellent question by IB. Absolutely freaking awesome. And I'm not even being, I'm not being sarcastic. That is a ridiculously awesome question because I jump around on that. That is freaking awesome question. So here's the footprint. I've talked about this before. It's really an awesome tool. I catch a lot of turns in the market because people ask me, hey, well, what do you do? How'd you do it or whatever? And I like crude. You see, we got like a gravestone doji here. It just wasn't as pronounced. And I tweeted that out yesterday. And I tweet out a lot. Sometimes I get on a thing where I tweet out a lot, and then like today, I don't think I'm going to tweet out a doggone thing. But you can see here, it just wasn't as pronounced. But you see, it's like a little gravestone doji. At the same time that we're putting the gravestone doji, but this is the 2 hour. Let's maybe get a 2 hour real quick. You see that gravestone doji? Now that was more pronounced. You see what I'm saying? That's freaking pronounced. And I tweeted that out. And then the wheels fell off the caboose. But you can see here, this one wasn't as pronounced. But I did tweet out later on and say, hey, you got gravestone dojis in RBOB and heating oil and Brent. It just wasn't as pronounced. But you can see here, here's Brent gravestone doji. You see that right here? And then here's RBOB or RBOB right there. You see there's little mini, you can't see it as well, but look here. You see that? It's just that with the gravestone doji, the wick's generally a little bit longer up here. But you're already seeing this, and this was getting frustrating. Like I said, it's pissing me off because it just kept going in one direction. And I'm saying, okay, here's this level. Oh, this is a major level. Oh, okay, the next one above here, and the next. I mean, it's still good to look at the levels, but these markets were just acting stupid. I mean, well, it wasn't stupid. It's just that there was something big going that was, like I said, that saying goes, fundamentals will always kick technicals in the rear every day. I mean, overwhelming fundamentals. You see what I'm saying? So, you know, if there was some blight in Russia or something, I can tell you the grain contract is going to take off. And it doesn't matter that this level on the soybeans or that level on the they're going to just blow through it. So that's what I'm saying. Overwhelming fundamentals will always trump technicals. Overwhelming fundamentals. But anyway, here's heating oil. Same thing. You've got this little, and still, once again, the wick's a little bit too short for me. That's why I didn't tweet out, hey, there's a gravestone doji, but they all were coinciding at the same time. And that's what I like to do. You know me. I like to look for confluence that adds more to my trade. You see here? And then here. And then we fall apart. On the footprint, I mean, I've gone as low as 1 minute, and I actually had to increase the size of this because when you get these bigger ranges, what happens is I'm looking like this. You see what I'm saying? You can't really see anything, and it makes it really hard. So what I did was I said, you know what? This, since I scalp it, it's more important. That's why I move my charts around. I go, how often does a 2-hour chart move around? So I can, you know, be looking at on another screen. But I think it's important to have these because, see, if I step away from home, I use my iPad to pull up my screens. I use that iTeleport. So I'm thinking, okay, well, I need to have my 30-minute. I can have the 5-minute, but the footprint helps me catch the turn in the market. So it varies. I mean, I'll use a 5-minute. If the range is getting like way too high and everything's all scrunched up, like I'll go in and adjust it to maybe it's a 15-minute. But primarily, sometimes I go with a 3-minute, but for the most part, I'll go with a 5-minute because you can catch more stuff. You can see the turns. It's not going to change the data. You can see the turns a lot better. Let's see here. I mean, when it's in European trading, you don't see things as pronounced. And I don't want to mess around with it right now. Okay, I want to make the time. But you can see turning points just like yesterday when I started coming down to 43.56 and 43.54. I tweeted it out. I don't remember what the footprint was, but it was really kind of ridiculous. And the market was like
can you hear me?
22 cents off of that, which that's what I'm saying. If you look at the footprint, you have and you're already thinking, I've got 43.56 there, and you see a huge footprint divergence at 43.54. Dude, you're just going to get long. I mean, now you know that your risk to the downside is pretty good. Oh, I think here's your Blake.